What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Monday, February 26th. Well, you guys, Tesla finished the day here on Friday down $5.44 a share, 2.76%. You know, I mean, if this were the S&P, it'd be a crazy day, obviously, but this is Tesla, and this is what, you know, Tesla shareholders, this is what we signed up for. So this is kind of just another day for Tesla, down 2.76%. Let's take a look here at the 1 minute chart to start, and then we'll get really contextual and lay out the bias that we're able to pull from a variety of data sources as we head into Monday and take a look at important levels to watch. If you guys appreciate me covering Tesla, I have been doing so every single day, and if there's interest, I will continue to do so. Let me know in the comments section. That feedback is tremendously helpful. I've seen a few of you have let me know that you're enjoying these, so thank you for letting me know. And also, you know, I do have a goal. I'm trying to hit 2,000 subs in the next 7 days or so, so I appreciate you guys subscribing to the channel. Let's get into it here. First of all, on the 1 minute chart, what I do like to take a look at, and by the way, first of all, the stock is down less than a point after hours here. If we look just very roughly, it's down about 0.5% after hours. Listen, see that? Take it with a grain of salt. Volume is so incredibly low. Always take after hours with a grain of salt unless volume is very high due to earnings or something of the like. So intraday here, revenue generating intraday trading or scalping opportunities around a core position that maybe we could look to replicate come Monday. Okay, were there any opportunities in Tesla today? So later in the day here, now you guys know, first of all, how I feel about scalping blue chips. It's unless you're utilizing one of your setups that has edge, regardless of if the stock that you're trading it on is in play that particular day or not, which by the way is the minority of setups. I have found in years of testing different setups now that truthfully, guys, scalping blue chips on just any old day, there's extremely little edge to be had. But for example, I developed a setup over time. I call it the repeat offender. It's one of the primary backbone strategies, just scalp setups that I have used. I've used it through big bull markets, through ridiculous bear markets, and sideways markets. And although in a sideways market, the setups are fewer and farther in between, it has retained edge through all of them. It's one of my only setups that has edge on basically any stock that is liquid enough if the setup presents itself in that stock. The truth is, the majority of setups that you try to trade, low volume pull-ins to EMAs, breaks of volume weighted average price, it really makes your life easy. A lot easier. Not that trading is ever easy, but it makes your life a lot easier if you trade most setups on stocks that are in play. Okay, but we actually had an interesting repeat offender setting up here on Tesla. This got a little bit sloppy. As we came in here for this following test, that 9 EMA was really tightening down and the 20 EMA was kind of caving in on itself. And when the channel there really starts to tighten down that aggressively, for me, I have found that it tends to turn the edge to flat, basically no edge, or even negative expected value rather than the positive that we're after, right? There's no reason to be wasting our time trading if we're trading setups that don't have positive expected value. The problem here, when you see that channel caving in on itself, you tend to get psychological barriers in the way of a profit take, right? A profit take that is ideally in this setup larger than the risk on the trade. Okay, so for me, that's why I didn't look at that one. I didn't take that one, and I certainly didn't alert that one. But as always, I will be looking on Monday for similar setups in Tesla that I would expect, you know, look as if they would have edge over like 1,000 trades, for example. Let's move on now away from the intraday mentality and start looking at the day-to-day mentality and start pulling out levels and bias that we can pull out of the market data here today and as we head into Monday. So this is the 5 minute. You guys know I'm always looking for volume correlations here. What's the volume profile like? Do we see obvious correlations with spikes in volume with big moves in stock price that tell us, hey, it seems like a big sample size of the market agrees with this move over the opposite sentiment? But we can't just look at the volume number. Okay, because different times of day exist in different contexts. For example, the open. I mean, would you ever expect on any normal day without news for there to be substantially higher volume midday than there is in the first hour off the open? Well, no, of course not. So you have to take that in context. And for me here today, you could say, well, there was elevated volume on this dump off here, this little dump off here move in Tesla. But, and I mean, you know, maybe this section here where we saw this little spike, I could give that to the bears, sure. But truthfully, to me, there's nothing shocking here that really stands out like a sore thumb. Now, if you took this and put it here, right, on a dump off at this time of day, then I think the bears would be onto something here. At least one factor of many, right? We have to look at them all. But this is well within context, though I think we could, give them a point or two there for that. All right. Throughout the rest of the day, I think it would be a force to really pull anything meaningful out of this volume profile here. So let's move on to the 30-minute chart and start really looking at levels that I'm going to be paying close attention to come Monday. So you can see here that we did give up both the 50 and the 200 period moving average here today. Ideally, I would like to see both of those reclaim come Monday. Okay, so we currently find ourselves about 1.83% away from the 50 period and approximately 2.25% away from the 200 period. Well within means for a single day on Tesla. I would prefer to see both of those get reclaimed here on the 30-minute chart as soon as possible from a bullish perspective. Bears, you want to see both of these curl over downside and continue to help be a psychological barrier to push that stock a little bit lower. Now, moving on here to the 4-hour chart, you can see that 50 period is very much so in play here. We are currently very close, just about 1% away from a retest of that 50 period. We did give it up today. Okay. Bulls, really simple here on the 4-hour. A reclaim would be beautiful come Monday. Bears, even if we retest it, you're going to want to see a hard rejection and a fade downside off of that 50 period, specifically here on the 4-hour chart. Now, the most important chart of all, the daily, right? Let's take a look here. The daily always paints the most obvious picture that I like to listen to the most. Okay, because the daily is the most watched. There's the most money watching this chart, so to speak, hedge funds, institutions, every retail investor, some might watch the 4-hour, some are watching the 30-minute, but everyone's watching the daily, right? So you get the most clear, biggest, I think, sample size and the most obvious story by looking at the daily, even just glancing at it. Listen, what's the story here on the daily? For me, it's 190 and the obvious psychological level of $200 a share. Okay, we could throw in the 177.50 to 180 range that we've been talking about a lot in the last few weeks here on Tesla. So look here, if I'm a bull come Monday, I want to see a hard bounce away from 190 and an upside move up toward $200 a share, if not reclaiming it. Now that would be a big day. Okay, that would be over a 4, maybe 5% day. But that's what I'm looking for here as a bull. At least bounce hard away from 190 and head up toward 2, if not reclaim it. All right, bears, really simple. You want to see a downside break through 190, which we've seen getting respected a little bit as of late. It's also a psychological, somewhat round number, okay? You would like to see a downside break through that. And while it is a bit of a move away, it's about a 6% move, head down toward that 177.50 to 180 range that has acted as such a support region in recent times. That's your goal come Monday. Now, let's take a look at the options bias here today. You can see here it's pretty overwhelming. So we have a 2.2 million total contracts traded volume. That's a lot of volume here. Even for Tesla, that's a lot of volume. So that's a good sample size. 1.46 million of those were calls. 744,000 of those were puts. Guys, that is quite the call put ratio. I mean, we're leaning heavily bullish to the call side heading in to Monday. And again, this is just from Friday here. Now, the short-term speculators, look at this. The 0 to 20 delta range. 657,000 calls, 270,000 puts. Heavy call side bias for the short-term speculators on those cheapy, out-of-the-money contracts. As always, make sure your risk is managed. Always more important to stay in the game. No one trade is worth losing or getting kicked out of the game, right? It's always more important to stay in, gain that experience over time, right? Be able to continue to play. Listen, if you got value out of that video, please subscribe to the channel. Again, as long as I get that feedback, I will be covering Tesla every single day. Appreciate you guys, and I'll see you in the next one.